The market seems like a trouble. We shall see. Eddie, I'm going to need rules for tonight's drinking game submitted in my inbox before end of the day, please. I need to hit up the liquor store, figure out what we're drinking tonight. All right, also send out the bingo cards. I don't know, man. Let's have a big hangout. Can we do a Google Hangout? You guys want to do that? Should be fun. All right. I'm gonna get so many angry emails in the morning. All right. Can we talk politics? Hell yeah. Remember, what happens in the hangout stays in the hangout. All right. Okay. All right, traders. It is November. Somehow it's November 5th, 2024. Don't ask me how that happened. And we're second day here into our open house. Really unforgiving chop of a market. There's your topping reversal. Piercing bar, guys. Congratulations. Shorts. Spider shorts look for 574.66 retest. If you're short the Qs, 491.50, 490.75. Okay. Let's do this indeed. All right. So today we're good. For many of you, this is going to be a cursory review, a remedial review for some of you, and for some of you, this will be newer information. All right, guys. Type 11 if you can see my screen. Type 11 if you can see my screen. Please type 22 if you can't. Okay, if you can't see my screen, please go ahead and refresh your login into the VTF. Yep, please refresh. All right, excellent. Let me turn off my squawk here so we are uninterrupted. Okay. All right, good stuff. So, like I was saying, for many of you, this is going to be a review. For many of you, this is going to be new stuff. So we're gonna go ahead and pace ourselves here. The purpose of this talk is to go beyond the primary the primary signal bars and chart patterns you're taught as a novice trader, so you can hopefully garner a more sophisticated understanding of how specific price action structures lead to momentum moves, how they telegraph momentum moves in either direction. Okay, so that's really the goal of this discussion, to help those of us who are still, or those of you who are still novice traders, to understand the actual, I call it, I guess, body language of the market when it comes to structure. Okay, so we're going to go ahead and jump right into that. But before, call your attorneys, get your paralegals. We've got a disclosure to go through, so read that carefully. Consult with your friends. There we go. All right. Next up. So, you all at this point know who I am. This is my prison mugshot just before I got released and scooped up by T3. Still on parole. T3 says I'm due for parole in 2 to 5. So, good times. My name, of course, is JR. I am the head trader here at Momentum Express. I've been a full-time trader since 2001. Great time to start trading full-time. Yeah, that was rough going. I am a price action and momentum trader. We have a heavy emphasis on news flow here and relationship-based trading. We like to look at the market as a totality, right? Looking at the bond markets, looking at commodities, yields, and of course the equity market, and see how all of that gives us a better understanding of price movement. I am a graduate of Columbia University. I'm a major in computer science, but computer engineering and history. That makes me, of course, eminently stupid. I am a highly educated idiot, and yeah. One thing I'll say about day trading is your fancy degree, your 20 years in finance means absolutely nothing when the rubber meets the road here. Uh, when it comes to day trading full time, I really am a glutton for punishment. So before you ask, it really is being recorded. I promise, it's being recorded. Really, really, it is being recorded. So let's 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 get started here. So of course, really our goal as day traders is to find momentum, right? We want to stay away from chop and capture the effective moves as efficaciously as we possibly can, right? And that requires some technical reading of the tea leaves, right? Some of that is order flow, some of that is options flow, some of that is mapping supply demand zones, and of course, uh, we're looking always at market structure, right? So changes in momentum result in typically reversals, widening ranges, narrowing ranges, and give us the viability of certain triggers in the market, right? Certain triggers are really important, like 140.35 today, right? We knew that was going to be an inflection point. We're talking about Nvidia, of course, and we said if they trigger 140.35 today, we're going to see a squeeze. If they trap longs here, okay, we're going to have a short. And what do we get? We got a beautiful short that hit target one right when I was having lunch there, immaculately, right? And Nvidia gave you a, I don't know, almost 3/4 of a percentage move in not a very long time. So perfect little scalp there, right? So understanding the viability of triggers is super important. So as technicians and traders, we're constantly analyzing past momentum to help determine how current moves will most likely play out, right? And we apply the laws of cause and effect. The cause and effect is a very Wyckoffean term, right? We call consolidations, balance ranges, reaccumulations, redistributions, zones. We typically call that a cause, right? We're building momentum. We're sort of charging the batteries when the price is at equilibrium, and we finally break equilibrium. We see a big effect, and we constantly are looking at those things. So, for example, you have a nice big bull flag, right? This was your cause, right? Your consolidation here. Your effect. I need an app. Your effect and your big consolidation here is your cause set in motion. It's almost like the market is recharging its batteries, building that stored energy for the next imbalance in supply and demand that gives you momentum. So our job is to constantly be looking at those moves as they wind up to create a big effect and break out or break down from a cause. A very important um, a very important concept to think about is symmetry, and we're going to talk about symmetry today. The market likes symmetry in all things. It doesn't always get symmetry in all things, but we're going to talk a lot about symmetry. Okay, the symmetry both in terms of angles, distance, and time, to see what that can show us about the likelihood of moves continuing in their intended direction, reversing, or intensifying. Okay, so be the momentum. I like that. So basic terms. An igniting move. An igniting move is the first move in a sequence. Okay. A secondary igniting move is a secondary move, like a leg two in a sequence, or like after a big igniting move, you have a couple of inside bars and a secondary push. A retracement, I think we all know what a retracement is, right? when you're retracing the initial igniting move back to a certain level. A reversal is a change of trend. Comparing igniting moves helps us gauge the current momentum, right? So, for example, we constantly talk about angle of ascent. So, say you have XYZ stock, okay, and it's going like this, okay, and then it has a shakeout bar here, breaks out of the range, and then breaks down again, right, and breaks up again and flags, right? We're typically looking at what, guys? For those of you who are momentum mastery graduates, what are we potentially looking at? A phase D sign of strength, right? So when you have an initial igniting move, right, you have the beginning building blocks of a trend change, right? So we compare igniting moves, like the first and second igniting move, to try to decide what the likely angle of ascent is going to be, what the likely duration of the move is going to be, and we use structure, we use order flow, we use tape reading to make those determinations. And then finally, talking about measured moves, looking at measured moves, you'll often see us in the room nail measured moves to like the penny, right? Yesterday, how did we know to get out of Palantir at the exact top? Well, we were looking at the prior legs of the move and extrapolating the based on ATR, based on the options market as well, but also on the measured move, using that to gauge where momentum was most likely going to be coming to an end. Okay. All right. Good stuff. So, whoops. I'm lost here. Okay, there we go. So, gauging momentum. We're going to get to the charts and the diagrams. Don't you worry. Oh, people want his charts. It's so funny. It's like, JR, provide us chart porn, please. Okay, so proper gauging of momentum. Well, why do we want to gauge momentum? Well, first of all, we want to be finding targets, right? One of the big cognitive dissonances that most traders really suffer through is constantly missing targets. You're selling way too early in the move, okay? Or you're in the money, deep in the money, and you're 5 legs up, you're overbought on the RSI, and all these things, and for some reason you think that it's going to go higher. All the technicals may be pointing in the other direction, structure, price action, and then you see all those gains, completely evaporate before your eyes. Does that sound familiar? Maybe somebody you might know very intimately. Like every time you look in the mirror, this is a very common problem, right? The cognitive dissonance of, you ex post facto look at your trades and you say, oh my God, how could I sell here? Oh my God, how could I buy here? So, gauging momentum, really very helpful in finding targets. And you guys will see from our room that we're constantly nailing targets, right? We were looking at that NVIDIA top, nailed the NVIDIA top. We nailed the triple Q top today, right? The S&Ps, we said, was it 5808, I think we said, to 20. So, helping find targets through proper gauging of momentum is essential to building confidence and trading with the ability to put a game plan together, right? If you don't know what the proper target should be, how much harder do you think it is for you mentally to execute a trade, to hold a position, to let go of a position, right? People always talk about how difficult it is for them to hold a trade. Well, it's also equally difficult, okay, for you to sell a trade when you're supposed to, or to close a trade when you're supposed to. So the proper gauging of that momentum is essential. Okay, knowing when to change targets. Okay, maybe you hit your target. Okay, but you're in a long. It's catching a bit. It's exploding through your secondary target. You need to have the presence of mind sometimes to say, I was wrong about my target, and I need to maybe take a partial here, raise my stop, and let this trade continue to work. Right? We have that situation happen all the time. And then finally, knowing when to exit and why. Why are you exiting? Is it for technical reasons? Is it for emotional reasons? Type 11, if you constantly exit a trade that's working perfectly fine, and if I asked you, why did you exit that trade? You would not be able to answer other than the honest answer, which is, I just can't hold on emotionally anymore. Sound familiar? Okay. Knowing when to exit and why, completely devoid of your emotional emotional whims and desires, is going to be absolutely essential for your success, right? I jokingly invoke Chewbacca every time we have, we like to have fun in the room, and Chewbacca is my inner id, the representation of my inner id. It's a joke, obviously. We'd like to have fun, but basically, we all have that inner cookie monster, that lizard brain, that id that just wants to, see green and take green, and is making decisions purely on an emotional basis, right? We have to learn when to shut that off, so that we can actually execute a trading plan and a game plan to as close as perfection as we can. This is the biggest challenge most traders face, okay? And I always say, one of the ways to fix a bad psychology is to start winning. Okay? One of the great ways to fix bad psychology is to start winning. And in order to do that, in order to begin doing that consistently, knowing when to exit and why, and being able to, you can't turn off your emotions, okay? But being able to take away their vote at the table is really, really important. Okay, so I know these are really, some of these things may be really basic to some of you guys, but these are the fundamentals that we have to master in order to succeed in this business. Okay, so let's get a little bit more technical here. The key elements of price action momentum, in my opinion, are angles, symmetry, price velocity, and time measurements and decay. Okay, we look at these things constantly, especially in channels, but also in ranges, in order to gauge, okay, the most likely end or beginning of a momentum move. Okay, so we're going to talk about angles first. Okay, so for example, this is a channel. Okay, and we're talking about signs of weakness within a channel. So for example, have you guys ever noticed that you're writing up a trend beautifully here at a very specific angle of ascent that you could trace with a ruler, right? And all of a sudden, okay, you see that angle of ascent change drastically. Sometimes it changes on a really narrow angle. Sometimes it's close to a ledge. Sometimes it starts to round out, okay? Well, what does that typically mean, guys? What does that typically mean in your opinion? Yeah, there's a loss of momentum, right? Sellers are starting to outpace buyers. So the angular symmetry in channels is absolutely essential, especially when it comes, especially when it comes to retesting prior pivots. Okay, what on a really shallow angle here, what do we expect to happen on the test of the prior pivot high? What do we expect to happen? Okay, a desperation upthrust, and then what? Failure. Yeah, why? Why is this? Why is this the expected behavior? Momentum slowed down. Sellers are outpacing buyers. Are we going to have enough power in the buyers to take out these prior buyers who are now become sellers, right? That's why selling. That's why shallow ledge reversals are so powerful, right? They're indicators of an early change of trend, uh, or early in the move, right? You see what I'm saying? So really, really a powerful indicator. And if you remember Nvidia today, that started to happen right as we were calling the top. Right, we were already short, and at 12:22, you had a shallow ledge, a failed breakout, and that's when the selling really began to intensify. Right, let me bring up a screenshot here. I want to. Remember, real time, almost real time example today, right? You had a shallow ledge in NVIDIA here. We were calling the lower high. And then we had the same pattern yesterday. Remember in NVIDIA yesterday, we said, okay, this lower high looks like looks like a ledging reversal. Very weak retracement, and away we went, right? Same exact idea. Example 2. What happens when we lose angular symmetry? Okay. We have these nice equal length, equal angled legs higher. Okay, and the pullback leads to a shallow bounce, an even shallower bounce. Is this also forming a ledging reversal? Would you guys say this is also forming a ledging reversal? Absolutely. You combine that with lower volume, lots of symmetry, and you sprinkle. There's just a little salt-based styled little puff of oscillator divergence, right? Your oscillators diverging here. Say, for example, on this push higher between these two, and you get all the signs that these two minor pushes higher are really an ascending wedge reversal at the base of an ascending line. And typically, this is also foretelling a nasty type of intraday reversal. So, this is something we constantly do in the room, right? You'll notice a lot of extrapolated scenarios here, and this is really, really important to understand. You know, I always say, guys, Q's, you're about to hit target here. Spiders, 574, 574.70, your target. Triple Q's 491, right there. Okay, time to cover. Not trading or barbecuing advice. Looks like our NVIDIA target is going to hit secondary. Very nice. See, I told you, Amber, every time I go on the mic, the market sells off. You know, we should start charging for these just so people can short the market when I start my presentation. Unbelievable. Congratulations, shorts. Again, just real life example here. Okay. Since we're talking about this, okay, to prove to you guys that this is not all academic, just real life example of what we're talking about in this sheet, right? Remember when we started this presentation, what is it I told you guys? We have a topping reversal coming, right? Lower high. What's the oscillator doing? We're making a new high here. What's the oscillator doing? Do we have a change in angular symmetry here? Absolutely, right? We have divergence in the oscillator, okay? Big volume bar, pivot low, lower high, and there is your rollover, okay? Prime example of loss of angular symmetry leading to a change in momentum, okay? This is your effect, cause, effect, right? This is the market cycle at work. It's not just academic, right? You guys remember before we started this, I gave you guys your short targets. This pattern occurs daily, every day, in every time frame. Okay? All right. Anyway, so going back to what we were saying here, I just wanted to highlight my point. Guys, your Q's bounced off the low-end target at 491, and you're also bouncing in the spiders here. Like I said a couple of minutes ago, time to cover, okay? Not trading or barbecue advice. Okay, so getting back to what we're saying here. So price hanging the bottom of the trend line, angular shift, lower volume, loss of symmetry. Here, this is a more real life example, right? As traders here, we're constantly looking at the symmetry in the legs, symmetry in the angles. What happens here? Right here, we have a change in angular symmetry, right? One thing I'm constantly looking at, especially after leg 3, okay, one thing I'm constantly looking at, especially after leg 3, a lot of these legs often get much longer than the prior legs, right? So what was, we talked about cause and effect, okay? What was the other Wyckoff rule that's super important that I constantly talk about? Do you guys remember? Effort versus result, exactly. NVIDIA, case in point, today, right? I'm doing these real life examples to just highlight the methodology, okay? It's not, we use technical analysis because we're trading for a living, okay? It's not academic. This is real. Okay. Is it fair to say that the length of these legs is approximate, pretty close? Look what happens here in leg 4. We're putting a tremendous amount of effort, right? But it's effort into an overhead supply zone and basically a gamma wall, right? Right there. What were we saying up here in NVIDIA? Okay? Well, we were saying there's a short about to happen here. One of the things I was looking at, okay, is the fact that leg 4 was so over-lengthened relative to these other legs, okay? An over-lengthened leg is often a precursor to exhaustion, okay? If the market's going, I wish I could, I can't, I know, whatever it is, and just chugging along, right? What's the oscillator doing here? Trending lower, right? Whenever you see an overextended final leg into an area of interest, an area of overhead supply, an interest where you have GEX exposure, whatever it is, okay, that is when you want to look for either a reconsolidation, right, new cause building, or a reversal pattern, okay? And that's when your ability as a technician and as a trader needs to come into place. Sometimes you break the channel, you come back in, you put in a pivot, and the trend continues, right? This could lead to trend continuation, right? It's basically a retest of a demand zone. Or it could lead to a sideways market and bearish schematics, right? You could have a rounding top here, an inverse cup, like an interim head and shoulders top after a channel, right, etc., etc. Now, I like to take the guesswork as much as I can out of these things and either short an area of supply with a tiny stop, or let the price go and then let nature take its course, right? 80% of the time, we're going to reject the re-entry into a balance range. Make sense? Okay. So here is some we're expounding a little bit on this concept here. Okay. So we're talking about changes in angular symmetry in channels. And now off this channel here, we have a sideways range, right? Sideways consolidation. And here you can see that, and we see this all the time, right? We have relatively sharp angles of ascent and descent. And then one of the telltale signs that I see is on a shallower angle here, right? On a shallower angle, you often don't get that bounce with the same kind of symmetry, okay? So the first thing I do when we're in a lateral range, okay, is I look at the angles of descent and ascent out of a consolidation, so we can start to see and look at potential bases, ledges, or other slow schematics that will give us a hint as to where the price auction will go. Okay, so here, for example, we call this affectionately a Kenny ledge. Okay, it's just basically a breakdown off a ledge. But what is it telling us here? Okay, that we've now lost angular symmetry in step one, and now we're unable to bounce back to the top of the lateral range. What is that hinting at, you guys think? What would you say? No buyers, okay. Well, it definitely tells you there's no buyers willing to take it up to the top of the range, okay? And it tells you right now that there's no sellers either, right? So you have a much more, you have all of a sudden contraction in volatility, right? Typically, when we have a tremendous amount of volatility contraction in a bearish context, because remember, you're breaking out the top of a channel here, like you did here, right? And now you're in a lateral range. When you're coming off of a higher level, off of a trend, and you're consolidating in a tight lateral range, is it more likely that you exit that lateral range lower or higher? What do you think? Higher or lower? What would you guys think? Lower. Lower is typically the case, especially given this consolidation, right? Now you could argue, okay, that if you're consolidating at the top of the range, like so, coming from a downtrend, okay, I would say the odds are that you're likely going to retrace, the level you were coming from before. But given the fact that you're consolidating lower in a pre-existing downtrend here, okay, what's happening here is bulls are doing their very best to defend the lower end of the lateral range, and eventually you run out of buyers, right? When you run out of buyers, what tends to happen? One key word. Sell. Selling for sure, but what I was going to say is momentum, okay? Okay, momentum is generated by a supply-demand imbalance. Okay, so this is a great visual illustration of a supply-demand imbalance that is about to trigger, causing the auction to move lower to look for buyers. Okay, price is like water. It's like water flowing down a river, right? And there's a big rock. If it can go left, it's going to go right. Okay, that's just the nature of the price auction. So when you're in a situation where you're coming off a downtrend, you're consolidating here. This is an area of equilibrium. Okay. Equilibrium. Buyers are willing to buy the bottom end of the range, but they're not willing to buy below it. Shorts are selling at the top of the range and covering at the bottom, right? You have an area of equilibrium. When you lose that angular symmetry all of a sudden, and you start auctioning at a much tighter range, okay, the body language of the market is telling buyers caution. Okay, the buyers are seeing caution, the sellers, okay, they're reading a different sign. You catch my drift, okay? They're seeing free beer. Make sense? And these patterns can be accentuated. In momentum mastery, we go over this in all kinds of detail. But you've got price symmetry here, false breakout. What are all of these? What are all of these longs in this failed breakout hoping happens here at the bottom of the lateral range? They're holding to see what happens, right? They're converting to all new kinds of religions. Okay, they're saying, Jesus, let this bounce, and I will never ever make a stupid trade like this again. Okay, and then when they break the lows, what do all of these hodlers do right here on this break? They sell, and what are the shorts doing? Yeah, they're drinking beer. Okay, so understanding structure here, specifically angular symmetry, within the hierarchy of price action, is really going to help you understand what is most likely to happen. Right? We gave a whole course last month on what's it called, the daily grind. It's like a 15, 16 hours of instruction on scalping. It was all based on two really important concepts. A, what's most likely to happen? And B, what is the other person on the opposite side of the trade thinking right now? Okay? Forget chart patterns, forget oscillators, forget technicals. You're trading against people, right? Remember, Soylent Green is made of people, while the market is made of people too. Okay? Understanding what the people on the other side of your trade are thinking is essential, okay, to knowing the how and the why. Okay? Right? Earlier, key concept in this presentation was knowing when to exit and why, while knowing when to enter and why is also important. Recognizing this type of dynamic, okay, and being purposeful in your trading based on what you see, angles, symmetry, and all the other things we look for in the market are essential to getting you in the trade, and then more importantly, keeping you in the trade. Okay? So another example here, time analysis. This is really important, right? So we also like to look at the symmetry in time. Okay, these legs here, okay, symmetrical. Uh, when you lose symmetry, when you lose angular symmetry here, okay, there's still a timer going off in the market, okay, for, this is base 1, this is base 2, what's going to be what's base 3 going to be doing when it hits this prior pivot high, right? And there's multiple scenarios here where price could go, okay, but but understanding the length of the bases in terms of as expressed in time is also super important, right? So here's an example, the time of the pullback. So for example, you've got leg 2 here, 2 of 3, and then leg 3, and on this pullback here you have a shallow bounce, okay, and you're watching this base right here to see what happens. Do we take this lower pivot high out? Okay, this is going to affect your decision making matrix. Okay, once this shallow bounce fails, okay, as a buy the dipper, you're probably looking to see what happens at this level. Okay, there should be a bit of a clock timer analyzing this pullback in terms of the time in the base, or prior time of the base in terms of the pullback, right? Oftentimes, when you have a confluence of time and key pivot level, you will get that bounce. Okay, so these are little unwritten rules of the market, in my opinion, that people don't take a lot of pay a lot of attention to. Another example, right? You have a widening channel here potentially. Okay, now if the channel widens uh, without retracing lower, so not this scenario, but this scenario, okay, you know the first thing I look at the prior length of the base or the consolidation here, okay, and I start extrapolating if we're going sideways in a lateral range, okay, at the end of that same period of time, I'll start looking for a sign of strength that takes me above the pivot and back and renews the angle of ascent. It's like looking at time for me is like built into my brain. I don't even think about it. I just constantly examine the bases and time symmetry within development of the price action. It's really, in my opinion, really, really important. Okay, so in this case, there's two scenarios I'd be looking at. Okay, so you go sideways here. Okay, there's always a chance that you're actually forming a head and shoulders, and especially if this angle, right, starts to futz around and base out here, okay, you're looking at a head and shoulders neckline break, right? But if on the move back to the mid channel, you bounce off the prior outer channel line, okay, then there's a possibility that we renew the angle of ascent. That's why you'll constantly see me draw regression channels in my charting, right? You need to be able to look at a big picture within a channel, right? Because oftentimes you'll maybe dip, right, and go one standard deviation lower, right, and what you thought was the lower channel line, the LCL, okay, is actually the mid channel line. Okay? And what's the only thing that's happening here is that you're going maybe one standard deviation lower on the pullback, okay? And actually V-bottoming platforming, okay? So basically you have a shakeout test within an uptrend, so you're in a phasey uptrend here. You have a shakeout, a platform, and then you resume the angle of ascent, okay? So that's why having a really cognizant understanding of what's actually happening based on the numerous price action templates we get from the market is essential to the proper reading of it. Make sense? Okay, so the 3 commandments of angles. Slower moves correct with more stored momentum and higher probability. How many times have we seen this, guys? You have a breakaway gap, a Palantir, a NVIDIA, and it just, we recognize these very early typically, like when we first have that, when we have that opening range breakout and that opening drive, okay, into our expected ATR on the day, oftentimes I'll say, guys, I'm looking for a lower high and a higher low, and I think we're building a wedge here, okay? Again, as a Wyckoff-based technician, I'm constantly looking for reaccumulative structures to form so that we can absorb sellers, build a new cause, and continue the trend higher, right? So sometimes a slower a slower move stores a lot of momentum, and you get that crazy 2:30, 3 o'clock break higher. Sound familiar? I mean, how many of these do we catch every week, right? So slower moves correct with more stored momentum and higher probability. Next, faster moves typically correct more gradually. A lot of faster moves, the problem with faster moves is that they tend to exhaust the pool of buyers unless your catalyst is like super incredible. Okay, a faster, more intense move will exhaust buyers faster and will typically correct more gradually. What does that mean? It doesn't mean the move is out of play, right? What kind of slow schematics do we typically look for when we have a really aggressive move that moves very quickly? What type of schematics do we look for in that case, guys? Room members should know this off the top of their heads, right? We look for three-wave corrective falling wedge snapbacks. We look for curling wedge reversals, right? We look for inverse head and shoulders shakeouts with secondary channels, right? So uh, it doesn't mean these moves are not in play. It just means that we need to look at the correct schematic to match the pace and intensity of the move. Evenly paced moves lead to trading ranges. This one is pretty self-explanatory. Is what I'm saying so far making sense, guys? I hope so. All right. So we'll talk about. So this is commandments of angles. Now we have an example, right? So shallow angles here, for example. So that would be a shallow rising wedge, a shallow ledge off of a head and shoulders, right? So slower moves correct with more stored momentum. I think that's pretty self-explanatory in terms of what we discussed. These are the sharper moves by contrast, right? Faster, more frenetic moves take longer to consolidate. So, like I was saying, you have a crazy move off the open. Oftentimes, you'll have a three-wave corrective move, and what we're looking for, right, is a more even paced, recumulative schematic in order to absorb the sellers and allow buyers to find an area of demand they're more comfortable in, right? So these can be, like I said, inverse head and shoulders, rounding bottoms, intraday cup and handles, volatility contraction patterns throughout the day, right? I mean, there's saucer bottoms, I mean, you name it, right? But basically, we don't always get this, right? Especially if it's a very aggressive move. Sometimes we get this, three-wave corrective, and it looks like it's going to really sell off, and then we start rounding, right? Say VWAP is around here, right? And eventually we start, just like a Kenny ledge, we start a platform right under VWAP, okay? And all these shorts, right? Shorts at this level, okay, or maybe shorts were shorted here and here. What are they thinking right here as we're cup and handling right up against VWAP in a pre-existing very aggressive uptrend? What are they thinking? They are not in a happy place, right? So faster, more frenetic moves take longer to consolidate, whereas orderly moves, right, channeling moves are symmetrical, and you just see a steady amount of buying. By the way, you're getting curling wedge reversals in QZen spiders right now. They bought VWAP and Nvidia. Nvidia, great short idea today. That was good. All right. So sharp V bottoms, V tops create sharp angle bounces that keep prices in range. Shallow angles, okay, shallow angles often portend breakdowns and breakouts. Okay, simple rules to live by. Change of angles. These changes telegraph slowing momentum. Okay, like we said earlier, we're emphasizing a very important concept here. So momentum price action rule. The longer the bearish rising consolidation, the more stored momentum for the reaction move, right? We're talking about cause and effect. The bigger and longer the cause. Why is it that the bigger and longer the cause, the greater the effect? Like, I thought about that when I was a novice trader, and I couldn't understand it. But why is it that the bigger the cause, the bigger the effect? Yes, there's more trapped traders on the wrong side of the trade, right? So here you have a really shallow angle, okay, where you have a lot of people, buying this dip, buying a shallow angle. You have a tremendous amount of participation here, right? As opposed to this. Okay? This tends to lead to a very nasty game of musical chairs, because when it breaks, you have all of the people at the same time saying, oh crap, I was wrong, right? So here is another example, right? Leg 3 and the break. This is okay. This is much better. Okay. Next, momentum angles. We have momentum price action rule. The longer the bullish falling consolidation, the more it's stored momentum of the reaction move. Again, oftentimes we'll see that really long, orderly, low volume falling wedge coming into that key pivot of potential support. We get reaccumulative demand here, right? And the buy the dipper has just ripped this higher, right? This is a cause that has had enough time, okay, for digestion, profit taking, and now you're ready to bring in a whole new set of new longs or longs that are adding for a very strong effect. Here you don't have that kind of same time to allow for consolidation, profit taking, and price acceptance. Okay, make sense? Okay, next. Momentum price action rule. Steeper and or longer at the end of igniting moves are signs of powerful reversal. So this is especially true, guys, if you're already overextended. Again, I'll bring this example up again. There are plenty of these today. I'm just using NVIDIA as an example, right? You had a leg 4 here, and this doesn't look perfect because it's the real world, okay? But this is leg 4 here. It's overextended, and then what happened at the end of the leg? It went vertical. You see that? With volume. With volumen. And we even said, guys, what we want here is an up thrust for 140, and then we want to see the bulls trapped here, trying to take it into a squeeze and failing. And that's exactly what happened, right? And NVIDIA ended up giving you a textbook 1% move back to VWAP intraday in less than an hour and a half. Okay, so this is an example of that, right? You have symmetry, symmetry, symmetry. So you have angular symmetry, time symmetry. And then what happens? Instead of having another pullback, you go a little parabolic here, right? And if you go parabolic, you have a strong angle of ascent here, what's most likely to happen to buyers? What are buyers going to start feeling very quickly in terms of the sustainability of the move? Anxious. They become Jehovah's Witnesses. They jump for joy. They become exhausted. You start running out of buyers many times. Okay, that tends to lead to very powerful reversals. Why is that? Why does that become a powerful reversal so often? Anybody? Bueller? Everyone wants out at the same time. Yeah. Market participants are happy to buy an orderly ascent, okay? It's easy to enter, to exit. You have a clear idea of what's happening. You're trending higher. When this happens, okay, it tends to trigger a lot of profit taking. People do not want to have loss. They don't want to take on losses, and they want to let winners become losers. Okay, so loss aversion is the key. So you're looking for that change of character, okay, that COC in the market when you go really vertical. Again, case in point, this isn't Monday morning quarterbacking. That was the short of the day, which was NVIDIA. Okay, which I exited prematurely because I had the wrong time for my presentation. But you see what I'm saying, right? You had this angle of ascent, then slightly higher angle of ascent, and you exploded into an area of overhead supply. This is the perfect short setup, right? When everybody realizes that they're wrong, okay, the selling begets selling, and people just want to get out at a profit. Okay, that's how human psychology works. Make sense? All right, good times. Angles and channels. Well, I forgot how long this presentation was. We'll be done here in a minute, guys. All right. The more V's equals more reversals. The shorter time symmetries equals more reversals. So you have two different types of channels here. Okay. Um, the really long, drawn out channels. Like, have you noticed like some names, like I don't know, Lily, for example? Once they gap and go, they just look kind of like a brontosaurus. They just balloon higher all day long. It's like somebody filled that stock up with helium, or ISRG is another one that does that. It just kind of trends higher all day long, and it's just kind of floating above the 8 and the 21 the rest of the day. Okay, these are really wide, 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 kind of gently sloped, orderly channels, right? The really sharp channels, okay, especially when they change their angle of ascent and break out off the tops line, these are the ones that give you the really gnarly reversals. Okay, like I've had some of my saddest calls with people trying to short Lily when it's just trending higher. It's doing like a 7% intraday move higher, and psychologically they've convinced themselves, well, it has to come in, so they keep on shorting it every time they think it's at the end of a leg, and it goes another 3 or 4 points. You know what I'm saying? Recognize the quality of your angles, the size of your bases, and the quality of your trend. Okay? Stop talking about it. Okay? Very, very important. And it's simple stuff, guys. Do we have short time symmetry and sharp angles in this narrow channel? If yes, okay. Let me look for if I must short an uptrend, let me look for a sign that we're losing time angular symmetry or having a move that will lead to buyer exhaustion, right? Those are the keys if you're going to be shorting counter trend. Angles and channel types. Okay? Again, a sharper type of channel is going to give you a more likely reversal. And here, for example, is an example of an inverse head and shoulders. This is one of my favorite patterns. You're coming out of a nice, tight, sharp angled channel, and all of a sudden you have a selling climax, a buying climax, and a platform. We call that the V and the platform, right? A V and a platform. Okay. So typically this will do one of two things. It'll create a reaccumulative range right near the neckline, or it's going to start channeling higher. Okay. So typically, once again, so typically when we have this kind of structure, it's a little bit of a gift, okay? Because after the inverse head and shoulders, what you really get is a reset, a change of character for the market, okay? And you have like a myriad of opportunities. And what I start to look at there, okay, is this type of price extrapolation, okay? So we have a sideways range, a trending channel higher, okay? And a potential reversal, mean reversion back to lows, okay? The reason I have this example here is because once we get this big change of character here through the inverse head and shoulders, okay, as a scalper and a day trader, the market just opens up full of possibilities. And my job at that point is to analyze price action using, angle, symmetry, and all, technicals, order flow, etc., to try to understand, okay, based on what I'm seeing, what is most likely to happen. If we start channeling higher here, okay, then we early break the channel and come back to the first pivot, okay, then I'll be looking, if we get a shallow bounce, for a head and shoulders with a neckline break, right? If we get If we get a move that goes right through, then I'll be looking for the pivot off the neckline break right there on the prior breakout, right? If it bounces and tests the top of this pivot high here, then I'll look for a bounce and look for the market to go higher. But the illustration here, its whole intended purpose is to use the angles and the size of the bases to try to divine what's most likely to happen in the context of this initial change of character. Okay, so that's concludes our talk for today. Thank you, TDV. I have a lot to say about this. They had to threaten me with cracker crumbs on the bed with momentum mastery if I went over 20 hours, but there's a lot of material on this in detail in the momentum mastery course, and we're about to come out with a volume 2 in the first quarter of this year, so we're going to dive much deeper into related topics. In the meantime, if you have any questions, feel free to ask, but this is just a peek at the trading and scalping methodology we use here in the room and how we end up getting so many of our targets right. Yeah, we have a tape reading course coming out January 15th. It's going to be an in-depth, old school tape reading. I'm going to throw in some order flow analysis too for footprint charts as well. So we're going to combine those two. Eye opener for you. Oh, that's good, Frank. For a lot of traders in the room, it's just an old review, but I think it's always helpful, right, to review a little bit. Anyways, let's take a look at the market here. I think it looks like we're dead on with our short idea here with the Qs. That's really good. S&Ps came right into 57.93. Nvidia, that was the other short idea. Okay, came right, look, point of control to the penny. Look at that. Okay, so our most traded volume on the day, you guys see this red line right there? Okay, we came into that prior area of high liquidity, and the long spot to dip there perfectly. See? Volume profile analysis, very, very important. Is DJT one of these side patterns after a gap up? What time frame are you looking at? Typically, yes, Rajiv. I'm what you would call an old school tape reader. We do, we haven't done a lot of tape reading this week, but usually during the day, we'll have one or two names that we go deep on and read the tape on real time. Do you look at the tape for roll tickers? Yes. DJT. Are you talking about the 2-minute time frame? 5-minute intraday? Yes, DJT is going sideways. It's in a range. I mean, if you think Trump is going to win and it's going to be clear by tomorrow, this thing is gapping to $58, $55 tomorrow. If you think it's going to be gapping lower, I don't know, 15, 20 points lower. Yeah, right to 22.91. So, please, Lord. The premiums on this thing must be insane. So we'll see. We'll see what happens. GDP now model estimate for real GDP growth. 2.4% in November, up from 2.3 in November 1st. Okay. If Trump loses, DJT goes to zero, isn't it? I don't know. I would imagine if Donald Trump loses, and I don't want any comments out of the room right now. Okay, I'm not making a political statement, but I think if Donald Trump loses, he's going to die in jail. Okay. Just based on the kind of charges he's looking at, which means it's not going to be good for DJT. I'm not making a snarky comment about Donald Trump. I'm not criticizing or praising him. I'm just looking at the facts. Right, so let's not get political. And the only reason I'm saying that is because if you're a DJT long, okay, and DJT loses by an unassailable margin tonight, this thing's going to gap down hard. Okay? Oh, brother, that was awful, JR. Can't stick around here. Sorry. My goal is to help traders make decisions, Pamela. And in my opinion, Donald Trump is running a very serious risk of seeing more prosecutions if he's facing an unfriendly Department of Justice. It's going to be a tough slog for him. So I'm not saying that to make anybody upset. I'm doing my job. Sorry that made you upset, Pamela. Anyways, back to business. What about the House and Senate? I have no idea, Shmuley. But that doesn't really affect the DJT trade. Yeah, I don't have a dog in this fight. I'm a libertarian. I'm not a Republican or a Democrat. I'm just saying there's a very serious, long bias risk to DJT longs. That's all I'm trying to say, guys. So don't get upset at me. We should be able to handle the truth. Yeah, you know. I try not to piss too many people off. I'm just this is the objective truth I'm seeing. Okay. I look. I'm telling you, if Trump wins, this is gapping up hard. If he loses, you look. It's almost like an earnings event. You know, be careful on DJT, guys. That's the only thing I'm gonna say. Yeah, that's the only reason I'm bringing up Trump and his legal woes, guys. I'm not trying to offend anybody, but that's reality. Okay. Okay. Is the ES a short here? Well, I have to be able to opine, David W. This is a very serious trade. A lot of longs get stuck in. Let's see. In your trades, do you play options? Yes, I play options almost every day, Thomas. I have a lot going on. Typically, I will curate the best trade ideas I have and share them with the room, like the NVIDIA short, the Q short, the earlier NVIDIA long, the Tesla short. But I'm constantly playing S&Ps and Nasdaq all day long. There's probably 15 minutes intraday don't go by where I'm not trading the ES or the spiders or the Qs. I'm very active intraday. Well, it already went to the 5-minute 21. So there you go. That's the trade. Can you relook at VKTX in the channel and Spike? On what time frame? what time frame? Infinity J.R. Yeah, I mean, this is a hot mess. You know, it's a very powerful thing when a really bullish pattern fails and then gets absolutely stomped. Okay, you know, this was a cause, a multi-month cause since July. Okay, you had your effect, your catalyst, and then your secondary catalyst here, and then they undid basically 3 weeks of price action in one session, and now they can't seem to they can't seem to you know, even take out the prior anchored VWAP. If I had to guess, I'd say this is probably going lower. I thought they had really good news. I'm not following this one. These guys do the Alzheimer's stuff, right? VKTX, I don't even. Is it weight loss? Oh, okay. It's a whole situationship. Okay. Um, Nvidia. If you covered when I said it was time to cover, you're doing good because right there, 490.93, you got the bounce. This looks like it'll probably trend higher. IWM for short. I don't know. Let's take a look. I mean, you know, bigger picture, you're still in the middle of the range here. So the proper profile, in my opinion, is September 13th to present day, and you're just breaking top of value here. Yeah, I mean, you might see to 24.50. The IWM is a very fickle trade. I'm drooling over Lily today. Nice cup for yes. It's like the best stock I never trade. I don't understand why. Let's take a look at the daily here. Let's see where we are in terms of the price volume analysis. You're right at a big volume cluster. If they retake 810, I think you're going right back to 830. So, alright, Carvana looking good. Palantir back at 51. Nice. Good times, guys. Alright, and what time is it? Wow, how is it 2:30 already? Day flew by, guys. Well, the NQs and S&Ps are ticking higher. So yeah. So on Tesla, we said 254.98 this morning was the real key resistance level. Look at that in orange right there. 254.98. Failure, 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 failure. Wild stuff. That's the level we were shorting off of. Very nice. I gotta say, I'm pretty happy with that level. It's been working. A-Lab's doing great. I mean, I would be taking some off the table here personally. Not trading a barbecuing advice. Just saying, if I were long at 92, Stone Glad, I'd be taking a little bit off. Okay. Well, nice trade, man. Seriously. Nvidia, a short into the close, or just more chop? I think more chop. See what happens. Oh, so sorry, guys. RKT volume pop off November 1650 weeklies expire November 8th. Position or trade update. Cloudy with a chance of meatballs, Don Johnson. Uh, Bro, I threw out like 30 trade ideas today. Did you short the Qs, the spiders, Nvidia, Tesla? Did you take the Palantir? Oh, okay, gotcha. All right, your excuse. I'll allow it. Okay, I'm just busting your balls. What's going on, man? Yeah, I see that, Pitbull. I'm not currently in anything, Don. I was shorting stuff with Gusto earlier. Off the top, we called the bounce in the S&Ps and Nasdaq. We'll see what the market does into the close. We could have a very volatile close here. I like 254.98 as resistance. Every time it hits that, I short it. Do a typing class. Yes. I am working on a typing course. Should be out in February. Contact info at T3 Live. Pitbull. We're partnering with Rocco's Teletyping Academy. Are you one of those people who just types with 2 index fingers? Nice. Old school, I like it. That's like the manliest thing ever. One finger. Wilson Chase. This typing with a single finger like Coco the Gorilla. Love it. Can you imagine this room without Wilson Chase? I love you, bro. Meta opens AI models to U.S. defense agencies. And beat the hell. Listen, bro. I have the world record on most keyboards destroyed in a single year. I just have a box of keyboards in my office closet. You took a typing test, didn't you? Nice. All right. All right. Cheers, everybody. Good luck, Donald Trump and Kamala Harris longs. You can't be a drunk if you're not drinking all the time, right? All right. Let's take a look back at the S&Ps here. We're very stubborn over 5,800. Okay, so going back to our little intraday discussion here. Okay, what are we seeing? What are we seeing here, guys? Ghost energy. I feel like someone else is going to rage quit the VTF just because I run that poll, Jacoby. This is such a touchy point. Let's not have anyone else rage quit. Drive going. I would tend to agree with you, Constantine. This is a pretty nasty ledge. The crooked finger pattern. Brandy, are you the Brandy from Days Old? Are you the Brandy? Oh, okay. We used to have a Brandy. Watching this very ugly ledge in the S&Ps here. We start power hour at 3. Let's see if we start to see some selling coming in. Watch the ledge break here. Watch the ledge views here. Short about the trigger, guys. I took NVIDIA short through 138, 139.82. Personally, looks weaker. Yeah. We shall see. Do we have any questions from our open house attendees that I may have missed earlier? Just let me know. You guys enjoying the open house? Was it everything you expected? Man, this chop's been pretty brutal. Bro, every week is not like this. This has been a miserable chop, Eddie. What are you saying? Oh, the room? Yeah, yeah. Yeah. We're a very interactive room. We're not putting on any kind of show, I don't think. You got work going on? Yeah, well, yeah. That happens. GME? Not currently watching it. It triggered a daily breakout through 2285. 2305 would be the next level. DJT's halted. Holy Toledo. This is very nasty. 34.34. Your closing pivot next. Yeah, we're getting some pre-election jitters there, huh? Is anybody watching this options chain? I mean, the premiums must be insane, right? I'm not even watching it. Crazy. You know he's got 34 outstanding felony counts, and he's supposed to be back in court in a week, right? I'm not being like a conspiracy theorist. Alright, NVIDIA about to cover half here. Yes, Lorenzo, it is halted. And everything is preposterous. Everything is ridiculous. Alright, covered half there at 139.64. 64. 139.50. Nice. All right, there we go. Got a bid at 139.50 next. There we go. Come to Papa. Alright. Got about a third left looking for VWAP here. Beautiful. We're scalping our weighted greens today. Very nice. What's DJT up to, guys? We still halted? Crazy. Alright, we got a bounce, perfect bounce off the bottom of the 2mm calendar channel there in NVIDIA. Excuse me. Okay. So, you know when this one's opening? Yeah, the bond, the TLT's running. 10-year. Alright, there's DJT. There seems to be a direct inverse relationship between DJT and the bonds. Look at that. Very interesting. Watch the break of 34.50 on DJT. That would signify the break of the closing pivot. It took a short. It is hard to borrow. Very hard to borrow. Alright guys, NVIDIA short. It's got to crack 51 here, come back to view up. What's up, Kelly? And we're halted again. It looks like, oh, are we halted? No. Yeah. $32.92. Look at that. So the idea on this one, guys, break of the inside bar through the closing pivot takes you right to the floor trader pivot. You see that? Kapow. Kapow indeed. Well done, sir. Were you out most of the day? There was the explicit lack of murdery noises in the background. Volume down, tick on Tesla, back to view up. Oh, roger that. Welcome to the party, pal. Alright, we got 3 minutes. 4 minutes until power hour. DJT selling off like a mofo. Oh, for sure, Jacoby. Look at the TLT. Okay, these are all related. TLT, DJT, DXY, etc., etc. Make sense? I mean, I would wait for a bounce personally on Tesla.